welcome back. So this video is going to be a freestyle. I'm going to cover the news. There's so much. Then I will give you guys my opinions on the news. And these are just my opinions, not financial advice. Consult your financial advisor before doing anything, before buying any stocks, equities, anything, cryptos. Do not invest in anything you're not willing to lose or lose sleep over. Stocks, extremely volatile, extremely risky. And yeah, this is just me ranting and telling you guys what I think is going to happen. Although I've been right lately, like for a while now. So my luck's going to eventually run out. Or it's not really luck, it's just, But there's a lot going on. So I had a really good couple trades. I bought that dip in precious metals, like literally to the minute, with some leverage ETFs, and I've accumulated some more stocks recently just to keep you guys updated. Go to my website, still 10% off. I'll put the link in the comment section below, or I think you could just go to my website, you'll automatically get it. Alright, so let's get into the news. Today, stock market dumped. And the Dow was down about 900 points at one point. I forgot what the close was. I think it was around the 400s. So, just to point out, I was looking at this. This little green dot over here, you see how small this little square is? Well, that's like the market cap compared to, some of these bigger companies and the rest of the market, right? Just to give you a perspective of how small the metals are compared to the rest of the equities market. It's like, I don't know. I think it's in the single digits percentile of market cap. And that's not even including the bond market. The bond market is like probably 50 times larger than all of this. And then the global bond market and the global equities market is 100 times the size of the U.S. equities market. All right. Let's actually take a look at the global map here. So, globally everything's sold off. Again, there's global slowdown, recession worries, this and that. So, in the U.S., you know what happened? And this is why I bought in Friday. Friday I put on that trade. What day is today? Yes. Friday I bought into my gold ETFs. Went long. I got stopped out. Monday or Tuesday morning, I put the trade right back on. I think it was Tuesday morning. And I caught the bottom, which was pretty great. But it's not too late. So let's just cover the news, and then I'll, do the charts. This might be a long video, but it'll be worth it. All right. So this is what I was looking at. Bonds. If the yield on the 10-year starts spiking up, and it was doing that a few days ago, but then it sold off. And I guarantee you the Fed is doing that. The Fed's purchasing bonds. I guarantee you behind the scenes. Something, all right? But if the 10-year yield starts shooting straight up, you will probably see metals sell off in a big way, but the stock market will crash. That'll be the big one. The beginning of the big one. Then they might come out and do QE4, QE5. It's technically QE5. But I'm not going to say the repo market purchases is QE, but it kind of is. Anyways, that's something to really look out for, because if interest rates start spiking in a really big way, like the 10-year yield gets above 2.10%, I think the Fed has lost control of the bond market. That's going to trigger a huge crash in the stock market, and then all debts come due, and the interest rates on like everyone's debt just starts ballooning, and party's over. So that is something to really look out for the big one. Is it the big one now? No, I don't. Not yet. All right, not yet. So, online brokers tumble after Schwab cuts commissions to zero. So, Schwab, a broker, one of the big ones, cut their trading fees to zero, which is amazing. I even I trade with Interactive Brokers and TD Ameritrade, and then I messaged TD Ameritrade. Anyways, today they did that yesterday. TD Ameritrade dumped 25% yesterday. And so did the others. They dumped by a lot, 15%, 6% for the others. Anyways, and but this is great because all of them have decided to cut them to zero to stay competitive because everyone would jump ship. I mean, guys, trading fees, $7, $5 trading fees really add up after a while, especially if you're a pattern day trader. Or if you're trading every day, they just add up. Think about it. That's $14 for a round trip. You buy and sell. $14. Now it's zero for all of them, which is amazing. I will look at the TD Ameritrade stock because it got hit really bad, and there might be an opportunity. All right. So, Treasuries joined a retreat across sovereign bonds on Tuesday after a weak debt auction in Japan triggered sell-off that gradually spread worldwide. U.S. equity futures advanced with shares in Asia. All right, so Japan couldn't sell their debt, couldn't sell their bonds. And Japan's the largest money printer in the world. And this is something that's going to happen like for the U.S. and for Europe as well, ECB. And then the yield on the 10-year U.S. bonds headed for the first time increase. And that caused a slight spike in the 10-year yield. And that's what I'm warning you guys about. But somehow they're suppressing it right now. So, meaning some idiots are buying bonds. I don't know why or who. But, I guarantee you behind the scenes there's money's getting moved around. Banks could buy bonds as well because they get the cash first, and it gets complicated. But the Fed issues bonds. You'll get banks, commercial banks, to buy them. They get the money first, so they get the cheap money first. And then it starts trickling into the stock market, and eventually some of it makes its way into corporations. And then eventually, when it's worth nothing, it trickles down to Main Street. All right. So here's the yield, right? I know it's hard to see. I've covered this. I'll cover it more in depth later. It doesn't matter as much. So the yield curve, though, is inverted. It's inverted. All right. Once the 30-year comes down, it'll be fully inverted. But it's already sort of inverted. All right, home flipper lending hits 13-year high. What can possibly go wrong? Again, another signal. We're probably at the top, near the peak. Even if the stock market has a melt up for a few months or something, it doesn't matter. We're still. I guarantee you, sometime 2020, we'll get the big one, right? The big crash. But it could happen later this year. I don't know, guys. September and October are historically times where the stock market sells off in a really big way, and we've seen this in the past, 2015, 16. It happened to be October or later in the winter, right? Around February or end of the year, beginning of the year. Fourth quarter or first quarter, right? And right now we're in the fourth quarter. There's reasons behind that. a lot of people like to adjust their portfolios, reallocate. They might want to take profits before the year ends so they could lock in some profits to pay taxes for next year, right? New York Fed starts new quarter with unexpectedly high 55 billion repo operation. All right, so the repo thing, right? I've posted in the newsroom a short video explaining what the repo market is. Essentially, it's overnight lending between the banks, and some banks need money, so they can lend, and banks lend each other money. Early 1900s, during World War II or something like that, the central bank, the Fed, they started doing it when the overnight lending market dries up. So there's no liquidity, there's no money to be lent. Or banks don't trust each other, or a big bank is in some serious shit, like Deutsche Bank probably, and the banks are worried and they're not lending to each other. And that's, like I said, that's a big red flag. It has the markets a little, on the edge, and it should, right? And there could be some serious underlying problem, like the quadrillion in derivatives. I don't know. But the Fed is obviously propping up the system and doing overnight. They're just injecting money. The taxpayer is paying for this too, by the way. And they're just injecting it into the repo market and giving out overnight loans to banks. So is it a bailout or something? No, but they're buffering lending. And when lending stops, that's when you get a credit crunch. And a credit crunch is when the market freezes and everyone stops lending to each other. If there's no lending, then businesses can't pay their employees. Everything, the entire economy comes to a screeching halt. And when that happens, guess what? Psychologically, everyone freaks out and it puts in a top. That happened in 2008. All right. The money market funds froze up. After they froze up, everyone, psychologically, everyone panicked. They started pulling money out. And if the Fed didn't come in and inject hundreds of billions, like 700 billion, I think, don't quote me on that. All the banks would have gone bust in 2008. So this morning, the United States ISM manufacturing PMI was released, and it was really, really weak. So manufacturing is weakening. Now, a lot of idiots, a lot of economists, the Ivy League economists, the Keynesians, they say it's not that big of a deal because, the U.S. economy and Europe, we're a service sector economy. We're a consumption-based economy. Which, I'm an Austrian, right? Economist, whatever. I'm not really an economist, but I'm like a rogue economist. I took a lot of econ courses in college, which I ended up arguing with the professors all day. But, by the way, they go to the central bank for, classes and stuff, and then they come back and, I don't want to get into it. Anyways, manufacturing is only 10%, 12% of the U.S. economy. Probably even less now. Which is the problem. That's the freaking problem. All right? That's why Trump's doing the trade war and whatnot. You have to understand, the service sector is a byproduct of the manufacturing sector. The financial sector is a byproduct of the manufacturing sector. Government revenue is a byproduct of the manufacturing sector. So how in the hell is the manufacturing sector only 10% of the economy? Now, you know what really freaks me out? A lot of people freak out about politicians and the elite, this and that. I'm not really scared of them because there's no way in hell they're going to have control when, the SH shit hits the fan, right? I'm just gonna say, guys, this isn't PG-13. It's the fact that in the West, in Western civilization, there's no, we don't build anything, we don't make anything. There's no real jobs. Manufacturing are the real jobs. Everything else is bullshit. It's just shuffling paper, marketing, selling, and scamming, and everything else is just, they're not real jobs, all right? The backbone of an economy is making shit. And why is that? Because you can't really export services all that much. You can only export goods. All right? And that's what scares me. Because when the reset comes and all the malinvestment gets washed away because the Fed artificially manipulated the entire stock market, bond market, and economy. So artificially, everyone has these service sector jobs because everything is artificially propped up through a Ponzi scheme, right? Well, when the correction comes, and it will come, and the free market will eventually force it upon it, this house of cards, all the service sector jobs are gonna just go away. They're all gonna vanish. All the clothing stores, the retail stores, we already see it happening right now. They're all just gonna vanish, guys. Everyone who's shuffling paperwork, playing on the computer, not making things, they're not going to have jobs. And what else is scary, to put this into perspective, if the manufacturing base of this country is only 10%, right? And it might still be like the second largest in the world, but if this 10%, right, is also artificially high because of all this debt, because things do get built during booming times because of all the credit expansion and money printing and artificially low interest rates, right? Low interest rates create credit booms, and then you get the bust. Well, the credit boom, our manufacturing base is this big now with this unprecedented amount of debt and borrowing and credit boom. Imagine what happens when the credit boom busts. Well, a lot of the manufacturing is going to bust as well. The manufacturing is going to go away as well. What's left of it? So what in the hell is everyone going to do when there's nothing, there's no jobs, period? Like, there's nothing to be built. And that's what scares me, all right? And, I haven't been making videos lately because I'm doing more kickboxing because... going to the range, like I'm that worried of what's gonna happen, okay, in the coming years, and just think about it, all right. And then look at this, historically, the U.S. and China, historically in human history, when a superpower starts not losing their superpower status and you have a rival rising, right, which is China, you either get one thing or another. Either the existing superpower goes peacefully into the night and with a whimper, or they just butt heads and go to war. China looks like they're prepping for I don't think the US will attack, because they would just lose. Because honestly, guys, the amount of people they have more people than we have bullets. All right, so but I don't think that's gonna happen. It's just too. But you never know. I'm just saying that China is really ramping up their military. So. Here's another thing the stock market hasn't really taken into consideration. And I told my friends when we were watching and drinking during the election of 2016, and I'm telling them, listen, guys, this is actually not a great thing because Trump's going to get blamed for the economy imploding, and so is the free market, because there's no way in hell it's gonna survive another 4 years because it's a giant bubble. And we have one more. We have about what 14 months to go until next election, something like that. 13 months, or I don't know, something like that, right? Well, Trump's approval ratings, according to MSM, so you don't know, but if this is true that he's not that popular, he's over 30, he's 37 popular overall. Economically, his approval ratings 42%. Well, if if the market tanks in 2020, or if it falls more than 20%, right? Then everyone's going to get worried. And then everyone's going to get worried that Trump's not going to get reelected because the stock market's falling. So it's a self-fulfilling prophecy. It's like a cycle of doom. And so the stock market sells off just because it's overextended, period, right? And because of the Fed, because they're not lowering interest rates fast enough, and the world economy's slowing. Then you got the tariff wars, right? So the stock market finally takes a huge dump, like a big one, like 20%, 25%. If it's over 25%, that's already recession. And then once your mom and pop retail investor hear recession, then everyone is going to get worried, and then the stock market is going to fall even further, and then Trump's not going to get reelected because of all of this. He's going to get the blame, and then the stock market is going to fully implode because who's going to replace Trump? A full-blown commie? Warren? Really? She wants to tax corporations out of business. Like, and then everything else, right? Just let in third world, give everyone free shit. What do you think that's going to do? Literally, if Trump doesn't get reelected and a Dem walks, it's over. Like, U.S. will go to third world within like a year. It'll be that quick. Yeah, and I don't think the market has even thought about that. They have thought about it. Mainstream media in the past 2 days has started talking about it. So people are thinking about it. And that's the predicament the U.S. is in right now. Will we make it until will Trump make it till 2020 election? I don't know. I think it's less likely than likely. All right. So and he's tweeting, as I predicted, Jay Powell and the Federal Reserve have allowed the dollar to get so strong, especially relative to all the other currencies, that our manufacturers are being negatively affected. Fed rate too high. They are their own worst enemies. They don't have a clue. Pathetic. Now, can Trump somehow blame the Fed and blame the Dems and the impeachment and all that for the stock market crashing and him not getting his chances of getting reelected? Yeah, he can. But you have to remember, he didn't get the majority vote. He just, because of the Electoral College, he won, right? Now, I think if people really feel it next year, then he won't get reelected. And he'll get the blame, which will be American society's biggest mistake in their entire lifetime, because the U.S. is probably never going to recover in our lifetimes. There's a really high chance of that, I think. Anyways, so the game is Fed needs to force the Fed to do QE and money printing to get him reelected. And is this good or bad overall for the U.S. economy? Trump getting reelected is good overall because the U.S. has a small chance, that Trump brings back manufacturing to the U.S. And that is, if he could just bring back some manufacturing, then there's a better likelihood that the U.S. won't fall into Mad Max scenario. If the U.S., if Trump doesn't get reelected, there's no manufacturing. Mad Max is very, very likely. And what I mean by Mad Max, if you haven't watched the movies, Go watch them, especially the latest one. I thought it was good. All right, so yeah, guys. I mean, I'm taking karate classes, and I have a boxing gym in my garage. All right, Hong Kong. Things are getting escalating there. China does not give a shit. China doesn't care, and those protesters keep waving American, British flags, this and that. I don't think they realize that the West can't save them. They're on their own. What's the West gonna do? China is powerful now. Although I think China is gonna fall with the rest of the world. It will be a global, like financial and economic depression, that the world has never seen before. Construction spending rises less than expected in August. Yeah, because no one can afford homes. Everyone's already levered up and in debt. Like, I don't see commercial real estate growing. If anything, I see more and more empty lots in retail stores. If you drive around, pay attention. When you start seeing things, in the real world, Main Street, that's a good indicator to what's going to happen in the financial markets and the economy. World economy sends up new flares amid growing industrial crisis. Yeah, I mean, globally, the industrial growth has been falling. Globally. Even China, right? This was a good podcast. How G20... So, G20 central banks are talking about digital currencies. Like I said, guys, they want their own, and which does legitimize Bitcoin, which is weird. And they want a cashless society so they could trap you into inflation taxation. What else? MasterCard, they're at their tricks again. So, as all equity markets, the bond market sold off, even cryptocurrencies sold off, everything sold off except for gold and silver. That went up. So, it's all the evidence I need, guys. It's, metals are the safe haven asset. This is a 30-minute chart. This is what happened in the past 2 days. All right, so Trump had a pretty good conference today. I mean, he was real alpha. He's pretty much going on the offensive. He's not going to get impeached, guys. He's not. So the impeachment fears are pretty much going to dwindle away, and he's going to go on the offensive. And he was dropping words like treason, this and that, which is true. And the coup, and it's pretty much what it is if you look into that. I don't want to cover that stuff. So, what else? That's why the market recovered a little bit before the close today. But I still think there's some selling to come. And I'll talk about that when we get into the charts for the next few weeks. So, oil's down. Now, why would oil be down? I think it's because economic growth. Globally, there's a slowdown for real, and that's why oil is selling off, because there isn't demand, right? People are traveling less, goods are being shipped less, right? Being transported less by semis, ships, you name it. Okay, Kramer's hilarious in a bad way. What else do we have? Here's my Instagram. So there's Tesla. People were buying Tesla stock because they're opening up plants in China. Although China has a bunch of competition out there. WeWork. Let's talk about that, because WeWork is more like no work. Now, what do I think of the Silicon Valley VCs and their recent? They're all trying to IPO. None of them make a profit, and this is indicative of the end of the bull cycle. First of all, these VCs, venture capitalists, they're pretty much all trust fund babies who have high connections, who get other people's money because of their connections and family. What's new, right? You know, they're trust fund babies. They're good at, the only thing they're good at is spending other people's money. Because, you know, the type of people you want to trust and invest with are people who came from nothing and grinded their way to the top. Not these young kids who just know people through family, right, and connections. Well, anyways, the IPO boom is pretty much over. No longer can companies IPO that don't turn a profit. And that means risk off. And that's pretty much it, guys. It's risk off environment. So the top, you know, it's not that are in, you know, red flag that the top is in. Chipotle here. They're installing a drive-through. Like, I've been saying they should have done this like 10 years ago. I wanted to take out student loans like a long time ago, like 8-9 years ago, and open up a Chipotle on my campus. And I wish I did that. But, you know, I didn't have enough funding. Of course, my father wouldn't help me. All right. Elon, you know, he's building, this looks like a corn silo. It's not. It's a spaceship. I think Amazon's is way better. Anyways, let's get into the charts. I'll talk about gold and silver last. All right, so here's the Dow Jones 12-hour chart. It's on somewhat of a support here on the 12-hourly. Let's go to the daily. I think that's what matters here. So daily, it's hit the 200-day moving average. So it did hit support at 26,000, the Dow. So we'll see if it could break it. It's broken at the beginning of 2019, and it's overshot it a few months ago as well. But we'll see. Either the markets are going to bounce like soon and rebound soon, like next week, or we're going to get like a few more weeks of downside and then they rebound. If we look at the weekly, so I'm going to look at the other indices. Hold on. And on the weekly, you know, there's support at 25, 24, I'd say 25,000, and then of course at 23,000. Let's take a look at what is this? Look at the yield later. All right, so here's the S&P. I think this is better to look at. Then I'll look at the Nasdaq and the Russell 2000. So as you can see here, there was a perfect buying the dip opportunity and a rebound. Once there was a correction down to my I'd say back over here, the 200 weekly moving average. This is a weekly chart of the S&P 500. So it retested the 200 week moving average over here. And this is called, you know, a bump and run. So it bumps and then runs and then sells off, bump, and then runs. Here's the second one right over here. As you can see right there. Let me check if my mic is on. Alright, it's on. That would have been horrible. Guys, I've done that where I've made a video and then like an hour later, once I'm done, I didn't record sound. It's horrible. Alright, and then it did it not too long ago, beginning of this year. Will it do it again? I don't know. We'll watch, right? If it does do it again, the Fed's going to capitulate and we're going to see some massive QE money printing, all right, if they do that. And rates will be cut to zero. Right now, I'm looking for support near term, intermediate at about 2760 on the S&P 500. And then if this is pretty much right now, this was it. This was just a dip. Then this was just a dip. It'll hit the 23.6 fib retracement. There's also a little minor support at around 2800. And then next support is 2700. Or no, not 27. Yeah, around 2700. All right. So, but I think right now, I think this will sell off a little bit more, at least to the 50% fib retracement, if I had to guess. So possibly another week to 2 weeks of downside. And then the Fed will cut more rates, maybe a 50 basis point rate cut, and then back up she goes. I'm theorizing, game theory. That's what I'm thinking will happen. Let's take a look at the NASDAQ. The NASDAQ is the best performer out of the indices. It's holding up better than the rest. It's on support right now at the 23.6 fib and support overall. I think it's going to, I think the markets will sell off the rest of this week going into Thursday and Friday. And then, like I said, possibly 1 to 2 more weeks of downside. Maybe even 3 on equities and in all the in the entire stock market. So there's a decent amount of support at 7,200 on the NASDAQ. Russell 2000 mid-tier companies, mid to smaller tier companies in the U.S. This chart looks bad. And, there was just another economist on CNBC, and he's saying that those are quite a few actually that were saying that the U.S. domestic companies are looking great. Well, their stocks are looking the worst. So, I don't see what the disconnect is. I expect a sell-off again here as well, at least down to the 50% retrace. This larger fib retracement would take you to the 23.6. So around 1,500. No, not 1,500. Around 1,420 on the Russell 2000. And by then, that's another week to 2 weeks. By then, it'll be the end of October, right? And by then, the Fed is coming out with another FOMC, and they're going to cut rates. All right? Probably 50 basis points if the market sells off for another 2 weeks. And that would be perfect drop on the Russell to about 1420. The FANGs, look at this. This looks bad. This is a weekly chart of the FANG index. Well, it's already on support. Major support here, actually. So it would be a really big deal if the FANGs drop below the 38.2 fib retracement. So the FANGs might actually trade sideways while the rest of the indices sell off. But if it does break this 52-week moving average, that's a big deal, and it'll take the rest of the market down. And the FANGs is what holds the market up, pushes the market higher, while the smaller companies, stocks, individual companies have been falling, especially this year. And that's because of corporate buybacks and because of index funding. So this is really what to watch. If the FANGs could break below the 52-week moving average, I believe it could, fall to 2,400, somewhere around there, 2,450 to 2,400 area, to the 50% fib retracement here. And then by then, the FOMC, and it'll probably be a dip buying opportunity on equities because they're not going to let it fall. They need a strong fourth quarter to go into 2020. To survive 2020, if there's chance of that, right? All right, here's light crude oil weekly chart. Like I said, crude, it dropped below the major support here. It's at 52.4 right now. So if crude keeps falling, if oil keeps falling, that's another red flag that globally economies are really weakening. People are driving less, you lose your job, you're not driving to work. So yeah. All right, let's talk about gold. Here's a monthly chart of gold. It's on a 5 count out of 9 to the upside. So technically, there's 6, 7, 8, 9. 4 more months of possible upside in gold. Where can that take the price of gold? There's not much resistance once the price gets back above like 1530. There really isn't. I don't know. It might stop, we could easily run into the 1600s. I mean, it might run up into the 1700s for gold. And if that happens, these mining stocks, the juniors, they really haven't taken off all that much. I mean, they've risen since the beginning of the year, but we haven't seen anything yet. But if gold gets up in the 1700, I mean, the writing's on the wall. So that'd be great. And I think it's very possible. Let's take a look at the weekly. So we have a hammer. So if this week closes anywhere above 1500 gold, we have a hammer candle that should send the prices higher, like big way, right? The RSI is oversold. The MACD crossed to the downside. So let's take a look at the daily. So the weekly's neutral as of right now. Very neutral. Let's take a look at the daily. Daily has a 9 buy signal, which could send us at least nine more days higher. Let's go to the 3-day chart. Nobody looks at that, and that's worked out good for me in years. There's no count on it. The 3-day's bullish, so there's a lot of upside on the 3-day. And I bought that dip, guys, perfectly, because gold fell to like 1480, I believe, somewhere down there. No, 1464. Yeah, and I bought that dip 2 days ago, or 3, whenever. No, 2 days ago. Yeah. So the daily is bullish. And that's pretty much all you need to see, guys. Buy the dip in metals if you haven't already. And I posted in the newsroom for free. Links below the video in the description section. Hey, I think it's gonna rally. So to the people who go in my free chat groups, I do reward you just for doing that. Because I don't want people to miss, opportunities. So yeah, a 12-hour chart looks bullish. Here's silver and gold. Yeah, I mean, I literally bought the dip. To prove it, let me show you. I posted it in the newsroom. Here. Where? Did I? I hope I did. Give me a second. I have to scroll. Here we go. This was October 1st. Dates right there. Gold, silver, daily charts. Next support areas are on the right y-axis in yellow. The price is getting smashed very quickly, and the Chinese are on a week-long holiday this week, so this was a perfect opportunity for a price smash. I do not believe there is much more downside to go. Worst case is 1440 for gold and 1650 for silver. For the intermediate time frame, a bounce or rebound will happen soon, if not this week, next week. In my opinion, tomorrow and the rest of this week, I will personally start to accumulate more mining stocks. I literally said tomorrow and this week. Now, in the private group, I literally told you guys what I'm buying, when I'm buying it. It's not financial advice, I'm just giving you guys an example of how to trade and how I do it. But, you have to decide on your own and call your financial advisor before buying anything. All right. So I literally caught the dip right at the moment it happened. I don't want to show you guys the private room because there's a lot of stocks in the alerts room. All right. So it's looking great, guys, for metals for the short to intermediate term. Here's some ETFs looking great. They haven't even started to run all that much to the upside just yet, but they will. It looks like. And I think that's going to happen. Do you want to know why? Let me show you. Where is it? As long as the 10-year yield keeps falling here and retests 1.46, this major support for the yield, metals are going to keep rising for the next, for some time, as long as this happens. Let's go to the daily, see what that looks like. Oh, yeah. So, this might take a few days. So hopefully we get some upside in metals for another week, at least. All right. But I'll keep you guys updated. I will be making more videos. It's just lately I'm really busy with research on, mining stocks, this and that. And I've been just really busy lately for the past few weeks. And I've had things planned for the weekends. All right. But I'm going to start making more videos. Let me know in the comment section what you want me to make videos about. I will make the strategy video. It's really important on how to trade, how to strategize, how to manage money, manage risk. Yeah, so that's pretty much all I have for now. Smash them likes. Please share my videos. It's the only way my channel grows. And